Introducing AusBiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum. Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover AusBiz Capital GrowWise, investing informed by experience.
G'day and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. So let's check what happened on global markets overnight. US markets were closed for the Labor Day holiday, although US E-mini S&P futures are up just over 0.1%. Europe's stock 600 rose slightly with gains led by the aerospace and defence sectors. The gains follow reports that European Commission President Ursula von der Leyen said Europe was preparing precise plans to send troops to Ukraine as part of post-conflict security guarantees. Defence giants Rolls-Royce, Rheinmetall, Heinsold, all advancing. Danish drug maker Novo Nordisk rose after the company said Wegovy cut the risk of heart attack, stroke or death by 57% compared with Eli Lilly's rival medicines Mounjaro and Zepbound. In London, the FTSE 100 closed slightly higher following its biggest weekly decline in almost 5 months on Friday. It was also helped by defence stocks as well as the miners. BAE Systems was up as Norway said it had chosen Britain for the acquisition of new frigates in a deal worth some £10 billion. And precious metal mining stocks gained, tracking the price of gold. US Treasury Secretary Scott Bessent has said President Trump has the right to fire Federal Reserve Governor Lisa Cook over allegations of mortgage fraud. He also said the Fed should be independent. The Fed is independent, but I also think that they've made a lot of mistakes. Well, Chinese President Xi Jinping has hosted a summit that included the leaders of Russia and India and outlined his vision for a new global security and economic order, saying we must continue to take a clear stand against hegemonism and power politics and practice true multilateralism. Global governance has reached a new crossroads. Meantime, in Europe, the unemployment rate for July was 6.2%, as expected, although the first quarter reading was revised up from 6.2 to 6.3%. And the US Treasury, well, the physical market there was closed, but Australian three-year government bond yields have risen to 3.46%, the 10-year up to 4.36%. Markets pricing in a 20% chance the RBA cash rate will be cut by 25 basis points at the next meeting at the end of this month, with a total of around 2 more cuts in the easing cycle. Now, the US dollar has hit a 5-week low as investors look ahead to a raft of US labour market data this week that could affect expectations for the Fed Reserve's easing path. The Aussie dollar having risen to 65.6 US cents, and Bitcoin has fallen further, currently trading to, in fact, just made a bit of a comeback. It was down at 107, it's now 109,000 US dollars. And the Brent crude oil has settled 1% higher as concerns mount that intensifying airstrikes in Russia and Ukraine could lead to further supply disruptions. Also, as a weaker dollar lent additional support to oil. Brent crude futures at $68 a barrel. Copper was off slightly, iron ore falling 1.5% to 101 US dollars a tonne. And gold has hit a more than 4-month high to trade just shy of an all-time high, buoyed by the prospect of Fed rate cuts. Spot gold at $3,477 an ounce. And silver has risen above $40 an ounce for the first time in 14 years. Well, let's get across what we're seeing on global markets with a focus out of New Zealand. Greg Smith joining us from Generate KiwiSaver. Greg, welcome back. It's been a while since we caught up with you. So,
Hi, Andrew, great to be back.
Well, I might just ask you how you've started there in New Zealand.
Yeah, Yeah, we've started positively, Andrew. So we're up around 0.4% as the NZX 50. So Infratil having another good session, up 2.6%. So that stock has been included at the ASX 200. So it's seeing a lot of passive buying on the back of that. But yeah, we're still quieting down a bit after our earnings season. That was a bit mixed. Large caps are still lagging a bit. We had some really good results for like some A2, particularly offshore companies. They're doing well in China. That stock was up around about 20% last month. At the other end, we had a shocker from EBOS. Mixed results from like sort of Fletchers and SkyCity. So we started off positively again today.
All right. What have you heard from earnings season that perhaps is an indicator of how the broader economy is travelling?
Yeah, so it was a bit of a mixed bag, but I think there is some sort of signs of sort of positivity coming through. SkyCity was interesting. Obviously, it's very much at the pointy end of the economy. Spark, likewise, they've gone for a very tough time, but there's some sort of glimpses of positivity coming through, and no surprise, Andrew, we talked about a lot on this program. It's to do with the rate cuts that we've seen. The OCR in New Zealand went from 5.5% last year. It's currently sitting around about 3%, and we should see at least another cut before the year is out. So that's going to transmit through the economy to businesses, also consumers. So around about half of all mortgage holders are coming or due to refix in the next sort of 6 months. So there's some signs of life. We had some good retail sales numbers. They were quite surprising. We've had some of our smaller cap retailers saying they're not doing as bad as they were. So things are picking up a little bit. And we also had the housing consents out here yesterday as well. So not exactly bursting up, no FOMO just yet, but consents have sort of stopped falling. They were down just 0.1% if you look at the 12 months to July. Standalone's doing pretty well. Apartments doing well, particularly in Auckland. The other thing we've had, Andrew, as well, is the golden, golden ticket, if you like, for foreign buyers of property. So the government have decided that overseas investors can buy properties worth 5 million or above, so it's around about 10,000 homes in New Zealand, and then they can do that, and that's sort of a boost to the economy, so they've brought that back. So we're starting to see some evidence of green shoots potentially in the housing market, the wealth effect that should trickle down as well as the next sort of 6 months. So I think it's really end of the year story, but positive start to 2026, I would say, as well for the economy.
Greg, why has the government unwound what the previous government put in terms of those restrictions on wealthy foreign investors?
Yeah, I suppose a change of government will do that, but a very politicised issue. I suppose concern that foreigners are buying up houses and there's a housing shortage in New Zealand. So I suppose what they've done is they've tweaked it. It is that the properties have to be worth 5 million or more. So I suppose they're trying to answer sort of both sides of the equation. Obviously, that was the previous government had a very different view, and there was all sort of talk of lots of homes owned by foreigners sitting empty. But we're really talking about the high end of the market in Auckland and Queenstown. So I think it'll sort of do much to sort of address the concerns there.
Now, Greg, more globally, what are you watching at the moment? I guess particularly given the focus on US markets. Obviously, they were closed overnight, but it's fairly data heavy this week as well.
Yeah, that's right. And I think markets are really interestingly poised. I mean, around record levels. Your mid-caps have been roaring ahead. You look at the Russell 2000 last month. But we're in this sort of new period of uncertainty, aren't we? Like tariffs, obviously, we've got to deal with China here. India's ratcheting up. But where is this all going to go with the court? The Supreme Court, obviously, you'd expect Trump to maybe win there, but the jury's out there. Well, literally, the jury will be out in terms of the judges. But we look at potentially tariffs affecting 70% of US goods in terms of those reciprocals dropping down to 15%. So all this data we're seeing could be quite differently affected. I think it's interesting. Inflation's ticking up, highest level since Feb. When you look at the core side, 2.9%. Retailers are starting to say, they're wearing the tariffs. You look at Gap, said Caterpillar, one after 1.8 billion of tariffs there. So this could all change. Meanwhile, we've got the Fed, of course, looking to support the labour market despite the fact that inflation is creeping up. So I think those non-farm payroll numbers on Friday in the US are going to be very, very important. It looks like the Fed's going to cut rates again this month anyway, but I think that could definitely swing the sentiment beyond that. So it's still very uncertain. We've got PMI numbers; they'll be certainly in focus. Of course, your GDP numbers over there will be looking perhaps with envy at those. Time will tell. But yeah, still a bit going on this week, even though of course the earnings season has settled down, which I think on the whole was a pretty reasonable one if you look at it from a global perspective.
Greg, great to catch up with what you're seeing there. Thanks for joining us from Generate KiwiSaver.
My pleasure, Andrew. Have a great day.
All right, let's turn our attention to the local market ahead of the open here on this Tuesday, expecting a marginally lower start. SPI futures off just 8 points. That's, of course, lacking any direction out of the States because markets were closed there. Stay with us because we'll get right across that in just a moment.